Hello and welcome to our live session today with Peter. So, what's been moving the market since yesterday?
Well, we have the Japanese yen, which is still hot after the release of BOJ's interest rate decision yesterday during the Asian session. I would expect that we may see JPY strengthening, extending, but that would be most probably at, I would say, a limited range. It wouldn't be so extensive. At the same time, I would note that the USD remains rather stable. There is some inactivity here, which may be also influenced by the fact that the Christmas season is approaching. So volatility is easing. Now, north of the US border, we saw the Canadian dollar, which was strengthening against the USD. I have to note here that we had Canada's retail sales growth rate, which tended more or less to accelerate beyond the negatives and showing growth once again, implying that the average Canadian consumer is willing and able to actually spend more in the Canadian economy and thus contribute to the recovery of the Canadian economy. I would be also noting that the CAD may have gotten some support from rising oil prices. They weren't exactly rising, they just edged up. And we have to note here that we had the AP weekly crude oil inventories figure, which showed a substantial drawdown. So that implied that the US oil market remains rather tight and more or less could push oil prices higher. On the flip side, we have also to note that there are extensive worries about the demand side of oil, given that in China we see market worries intensifying about COVID cases, especially in Beijing. And should that issue intensify further, we may see the market sentiment turning cautious, which may provide some support for safe haven trading instruments, while riskier assets such as commodity currencies, the Aussie for example, and equities could be suffering a little bit.
What about US stock markets?
We had an interesting development about US stock markets yesterday. It was characteristic on a technical level that a 3 to 4 day losing streak was halted. And even some indexes, say for example Dow Jones and S&P 500 were in the greens. Nasdaq practically remained at the same levels it was. So overall we may be about to see a correction high of US stock markets. I would be noting though that there is still, I wouldn't say a cautious, but a worried sentiment about the possibility of a US recession. And I cannot miss out on the headlines that Elon Musk has resigned his post as CEO of Twitter. And that could have a positive effect on Tesla's share price. On the other hand, we have to note here that since the stock split in August, Tesla's share price has lost over 50% of its value. So I'm not sure that even should Musk return to Tesla fully, whether that would be able to reverse the bearish tendencies for Tesla's share price. Mm-hmm. On the positive side, it may hold it somewhat, but that remains to be seen.
What about gold prices?
Gold prices tended to be on the rise yesterday. Definitely they benefited from USDC inactivity. The negative correlation practically allowed gold's price to rise. There is a slight catch here, and it's in the US yields. US yields were also on the rise. And that may not allow gold bulls to actually advance as far as they can. So it's a little bit conflicting. On the one hand, we have the US dollar, which remains inactive with some slight bearish tendencies. On the flip side, we have US yields which are on the rise, so we may be seeing gold's price being a little bit under pressure here.
And what's on the calendar for today?
Well, we already had from Germany the GfK consumer sentiment. It was for January, a little bit more forward-looking. It improved slightly more than expected, which was a positive for the common currency. And I would be noting from the UK, we're getting the CBI distributive trades indicator. It's for December. And should it drop deeper into the negatives, that would be an indication that UK retailers have seen a drop in their revenues. So given that we're talking about the Christmas season, that could be an issue. Other than that, I would be highlighting from Canada the CPI rates for November. Should we see especially the the core rate on a year-on-year level decelerate further, that could weaken the CAD, as that would imply more or less that inflationary pressures are being subdued slowly but steadily, and that may be easing the pressure on BOC to actually tighten its monetary policy. And I would also be noting the US consumer confidence. A slight improvement is expected, which may show a better morale on behalf of the average US consumer, which may allow her to actually spend more in the US economy. And we had already yesterday the housing starts and the building permits of the US with some conflicting messages. The building permits dropped more than expected, which reflected more or less the tightening of the Fed's monetary policy that was expected. I would note though that the housing starts remained relatively unchanged. Today we're going to be getting the existing home sales figure. Now should that figure drop as well, that would be more or less spelling trouble for the US real estate sector. And last but not least, for oil traders, I would be noting the release of EIA's weekly crude oil inventories figure. Should there be another considerable drawdown, practically confirming the tightness of the US oil market as reported yesterday, that could provide some support for oil prices.
And what about the monetary front?
On the monetary front today, I would be noting from the Czech Republic, CMB's interest rate decision. Now, the bank has been on hold for the past few months at 7%. No changes expected. Once again, there's a slight catch here. And the catch is that in the Czech Republic, inflation has been slowing down, yet in November it accelerated. And that highlights practically the upside risks of the release. So I wouldn't be surprised, despite expectations being for the bank to remain on hold at 7%, and that's our base scenario for now. I wouldn't be surprised to see the bank hiking rates at 7.25. Or even if it does not hike rates, it may sound considerably hawkish, which may provide some support for the krona.
Any final comments for today?
Well, it's going to be interesting to see, especially about US stock markets, whether there's going to be an actual reversal and whether they're going to be rising more steadily, or whether the hold of yesterday was just a correction and the bearish tendencies are going to be renewed. Lots going to be dependent also on the market sentiment. Should the market sentiment turn a little bit more cautious, we may see US stock markets dropping once again. Should there be more optimism on the other hand, we may see US stock markets being clearly in the greens.
Thank you, Peter. Stay tuned for our next live session with Peter.
Welcome to the technical analysis part of the presentation. My name is Peter Yusuf, Senior Market Analyst at IronFX. In front of your screens, you have the US dollar index. It's the 4-hour chart. All charts to be presented are to be of the same time frame, unless otherwise stated. Now, with no time to waste, the US dollar index remains in a sideways motion. By the way, you have to note here that we recalibrated the resistance and support lines of the US dollar index in order to better reflect that sideways motion, setting up new resistance and support lines, definitely narrower than the previous ones. And I would be noting that we have range bound movement between the R1, 104.55, which was tested practically twice, once here, twice here, and the 103.05 support line, which was tested once, to aim for here 3 times. So practically we see the sideways motion being continued, probably given also that we have an RSI indicator which is just below the reading of 50 and remains pretty close to it, implying a rather indecisive market, maybe with some slight bearish tendencies as it's just below the reading of 50. Overall, though, I would like to add here also the Bollinger Bands, so please allow me. Trend Bollinger Bands. Let's have a look how that goes. Okay. You can see that we added also the Bollinger Bands, which have narrowed, converged, and remained rather narrow. That tends to imply that volatility is rather low. Nevertheless, should, for any given reason, the US dollar change direction, for a bullish outlook, we would require a clear breaking of the 104.55 resistance line and the price action to approach, if not even breach, the 105.50 resistance level up here. So it would be something like going up, breaking the R1, reaching, maybe even rising above the R2. On the other hand, should the bears take over, we would expect the price action of the US dollar index to drop, break the first support line, 103.05. Definitely would require lower true than this one's, and start aiming, if not even reach, the 102.10. Okay, let's have a look at Euro USD, which moves in a similar fashion. Once again, though, I would like to readjust the levels, especially practically the R1. And I would bring it to this peak here. Actually, we could lower it all the way down here. Yet, in my opinion, that's too narrow. I would allow for some space before I actually call in the bullish scenario. And that would be the 1.0730 resistance line. I think it became obvious from the paired sideways motion that here we go. Once again, sideways motion expected to be maintained. Note how the RSI indicator is running along the reading of 50, strengthening the case for sideways motion, as are also the Bollinger Bands, which have converged and are pretty narrow right now. Once again, highlighting how volatility has dropped. We tend to maintain a bias for a sideways motion between the 1.0580 and the 1.0730, allowing for some slight space for the bulls to take over. Note how the S1 was tested extensively. We had 1, 2, 3, 4, 5 tests, while the 1.0730 only once. Should there be a selling interest for USD, say for example, in case the US dollar strengthens, we may see the price action dropping breaking the 1.0580. Definitely that would be a signal that the sideways motion may be about to change. A clearer drop below the S1 and possibly aiming, if not even testing, the 1.0460, a level which was tested once here, twice, and to the upside once, twice. That would be a signal, in our opinion, that the bears have it. On the other hand, should the pair find fresh buying orders along its path, in case the euro strengthens or the US dollar weakens, for example, we may see the pair rising, breaking the R1 1.0730 and start aiming for the 1.0935. Let's have a look now at cable. In a similar fashion, yet we may be seeing here some slightly increased bearish tendencies. I'm not denying here that there is a sideways bias in play. But in our opinion, the fact that the price action has tested extensively the 1.2125, actually at some point even attempted to break it. Also note the RSI indicator, which is below the reading of 50 and has a downward slope. That tends to imply that there may be some bearish tendencies in play here. And I would be highlighting, let's drill out from the H4 chart into the H1. That should make it more obvious. And let's widen this. See that there is a sideways motion, but we see that slowly but steadily lower peaks have started to form, especially 1, 2, 3, 4, 5, while the Chos are still holding on, actually fighting a floor on the 1.2125. Back to the 4-hour chart. Should the bears actually take charge of the pair's direction, we may see it breaking the 1.2125 support line and start aiming for the 1.19. We got a nice message from Mr. Francinato Arujo, and he's from Brazil. It must be pretty early back there. Good morning. Should the bulls take over for any given reason, we may see the price action rising, and the first test would be set at 1.2345 in our opinion. We see this peak here as a very, very clear resistance level, given that it was tested a couple of times and it was able to reverse this nice upward motion here. On the other hand, we have to know that the boys at research also highlighted this peak, and this peak. Pretty valid. Once again, though, I think I'm going to be sticking with this one. It's far more clear in our opinion, and for the time being is a little bit out of reach. But should the bulls take over, I wouldn't be surprised to see the R1 even be broken. In which case, the way is paved for the R2 1.2660. Once again, sideways motion expected, but slight bearish tendencies also detected. On the other hand, note how the Bollinger Bands have narrowed here. It's very characteristic of the low volatility for the pair. Okay, let's go to USD/JPY. Let's see if the bears still have it. Yes and no. Okay, we have two elements here. The first clear element, which we have noted yesterday, was the drop of USD/JPY breaking consecutively the 135.80 and the 133.90 after BOJ's interest rate decision. Now, the pair has hit a floor at around 131.80. In our opinion, though, given that we have the RSI indicator, which is at the reading of 30, implying a rather bearish market, I think the bears are still in play here. Should the pair be able to clearly break below the S131.80, the next possible stop would be the 129.30. Let's have a look at that, where that actually rests. Okay, it rests here, here, and here to the upside. Seems to be positive. I'm keeping that. And the next possible stop would be the 1.2630 after this too. On the other hand, should the pair stabilize, I would expect it to continue to revolve around the S131.80 in a tight range bound movement. Should the bulls be in charge, we may see the price action rising, breaking above the 131.80 definitely, breaking also the 133.90 and start aiming for higher grounds. You know what? I'm feeling a little bit uncomfortable. Sorry about the pose, but I'm feeling a little bit uncomfortable about the S3. I know it's an extreme case scenario that it reaches that low. And let's have a look once again where that rests. I think a readjustment higher would be in order here. Okay. Clear touch here. Nothing in between actually. But there's another true here, another true here, and here. Let's have a look how this looks. Seems pretty good, eh? Has a double touch. Let's shift it. And that would be the 127 support line. Readjusting the chart. Okay, let's move to USD-CHF. Once again, clear sideways motion between the 0.9330 and the 0.9210. For the time being, that does not seem to be the probability that it will break above it or below it. Note the RSI indicator though, which may be implying otherwise. It's currently at 43, a little bit lower than the reading of 50, and may imply some slight bearish tendencies for the pair. For the time being, our base scenario remains for a sideways movement of the pair between the pre-mentioned levels, and as long as they remain intact, we keep that. Now, should the bears actually take charge, we may see the price action dropping, breaking the 0.9210 and start aiming for 0.9090. On the other hand, should the bulls take over, I would expect the price action to break the 0.9330. That would be a first signal that the sideways movement has been abandoned and the bulls have it. And start aiming for 0.9450 level which was tested here and here to the upside. Pretty valid. Okay. Let's have a look at commodity currency pair AUD USD. I would like to make some changes here. I would like to make a recalibration practical of the resistance and the support lines. I feel that the sideways motion here has set new support and new resistance lines which are not being adequately reflected. Let's do that. I'm going to be pushing the S1 lower, reaching 0.6625. The R1 also comes lower. Going to take this peak here. True, seems good. And that would be the 0.6740. Locking this in. Slight change also in the R2. Let's catch this peak here at 0.6880. Have a look also at the R3. Going to be lowering this as low as here. One peak, second peak. Quite interesting. And that would be the 70. 5 0705. Okay, my bad. That's it. Let's also have a look at the support lines. Here we have set a new S1. The S2 was based on this peak here, could be lowered a little bit. Let's go further back, unlocking the chart. Okay, we have continuous peaks here. 1, 2, 3, missing this out, 4, missing this one out. I think it's valid. And that would be the 0.6525 support line. And we have this true here, another one, and more here. This seems to remain valid. Let's readjust and correct the labels. So the R3 goes down 35 pips, reaching 0.70050. The R2 goes down to pretty much actually 35 pips as well, and that's at 0.6880. The R1 is now being placed at 0.6740. That's 55 pips lower. the S1 at 0.6625, another 45 pips lower. With 0.6525, that would be 20 pips lower. And finally, the 0.6385, which remains unchanged. That should be it. We can see now how the resistance and support lines actually better define meeting points of the price action with levels which either overcome the selling trend or overcome the buying trend and turn the direction of the pair. The sideways motion for the time being is expected to continue. Note the RSI indicator below the 4-hour chart, which is below but fast approaching the reading of 50. As long as the price action respects the R1 0.6740 and the S1 0.6645, we intend to maintain our sideways bias intact. Now, should the R1 be broken, that would be a signal that the bulls are taking charge of the pair's direction, as practically this peak here will be broken and we may see the price action rising, breaking. Next possible stop, as despite there being some mid levels here, which I recognize, I would be setting the R2 as the next possible stop. In my opinion, the way is paved after the R1 for the R2. On the flip side, should the bears take over, I would expect the price action to drop, break clearly the 0.6645, a level which provided support here, and start aiming for 0.6525. Moving now to USD CAD. A very, very interesting chart. Here we are. On the one hand, we see how the price action actually respected the upward trend line which has been guiding the pair since the 16th of November. It's very interesting how it bounced even slightly at this point. On the other hand, though, we have to highlight that in the past, the pair had some difficulty to actually break above the 1.37 resistance line. So we have a conflict which is forming a bullish triangle here. Now, under any other given circumstances, I would be highlighting that the bullish triangle is about to signal that the upward movement will continue. On the flip side, though, I have to note that the RSI indicator is running along the reading of 50, implying a rather indecisive market and suggesting that the sideways motion is to continue. So we see the case for the pair to remain in a sideways movement for the time being between the 1.37 and the 1.3525. Should that be the case in the next 24 hours, we may see the price action breaking the upward trend line, which has been supporting the pair since the 16th of November. On the other hand, should the bulls be in charge, we may see the price action taking another swing at the 1.37 resistance level, and should that be broken, the next possible stop could be the 1.3805, and I'm setting the R2 at that level because of this peak here. It was a level which practically reversed a beautiful upward motion. See the V-shaped reversal, it was a very clear reversal. Now, should the bears be in charge, one may argue that it's not probable, but it's still a possibility which we should cover. The first stop is definitely the S1 1.3525, a level which was extensively tested here, while we set our next level at 1.3395, which was tested once, twice here. So a downward motion would be something like dropping, breaking the upward trend line. Once again, a first signal of a changing trend. Breaking the S1, 1.3525, and the lower trough than this one would be signaling the start of the bear's journey. And start aiming for the 1.3395. It's pretty wide, I know, but see this movement here. It's a movement which USD CAD was able to make within 24 hours. Or even this here. It's even more intense. Or this job. So the pair has the ability of wide movements, sudden wide movements. And that ability should not be underestimated in our opinion. At this point, now we have a choice here. We either have a look at NZD-USD or at WTI's price, which is directly related with the Canadian dollar in a positive manner. Let's have a look at the Kiwi first. Finish off with the FX market, and then we can have a look at the commodities market and the stock markets. Now, the Kiwi has been dropping. It had found some support at the 0.63. It has just broken below it. It's not a clear break, but in our opinion, there seems to be a nice downward trend line here. So I would expect, despite some fooling around the 0.63, the bears to finally take over and break clearly below the 0.63, start aiming for 0.6155, a level which was tested by the bears here. It was able to reverse the downward action. So let's change the 0.63 into resistance line. Actually, I would wait a little bit further before switching the role of the level. But given that we have a bearish outlook here, I feel more comfortable doing that and providing you guys also with a new ultimate support level, which I would be setting pretty much lower. Now we have a level here. Note the touch by the bears here and the bulls here. So it was confirmed on both sides. On the other hand, one could argue and go as low as this one. Yeah, I'm keeping the previous one. Somewhere here. It's already pretty wide here. Another could argue that we could be using this peak here. I feel more comfortable here. And that would be the 0.5895 in green. Let's also correct the labels. Here we have it. 58.95. So for the time being, we tend to maintain our bias for a bearish movement of NZD/USD, in which case we may see the price action breaking clearly the 0.63 support line out into resistance and start aiming for the 0.6155. The RSI indicator below our 4-hour chart is at the reading of 37.938, which is quite low and supports the idea of a bearish outlook. Okay, let's have a look now at WTI. WTI, which edges higher, yet has still to escape its sideways movement boundaries. And that would be between the 78 resistance line and the 73.60. As long as the price action remains between these boundaries, we tend to maintain a bias for a sideways motion to continue. On the other hand, we have to note here that the RSI indicator seems to imply some slight bullish tendencies. It has been expressing an upward slope since the 16th of December. Has broken above the reading of 50. Actually, the reading of 50 provided even some support in a couple of cases. Should the bulls take over, I would expect the 78 resistance line to be broken, with the next possible stop being the 83.20. On the other hand, should the bears take over, we may see the price action dropping, breaking the 73.60 and aim for the 70.30 support line, a level which was tested extensively. Let's have a look one. Yep, that would be on the 9th and 12th of December. For the time being, and as long as the price action maintains or respects the R1 and the S1, we tend to maintain our bias for a sideways motion to continue. Let's have a look at US stock markets, making a start with Dow Jones. Now this is a break. It's a very interesting move. Let's readjust the support and resistance lines. Here you go. The index has bounced rather beautifully on the 32,670. Despite some initial breaking, it was not able to clearly break it and was forced to actually move higher. And in this case, what was broken was the downward trend line guiding it over the past 3 or 4 days. So we're talking about an interruption of the index's bearish movement. Initially, we would switch our bearish outlook in favor of a sideways motion. Mind you, the RSI indicator has climbed from the lows of the reading of 30 up all the way to the reading of 50. Should the US dollar index, should the Dow Jones remain confined between the 33,470, which used to be a former support line, but given that the price action has moved decisively lower, has turned its role into a resistance line. Note all the touches it had as a support line 1, 2, 3, 4, 5 in the past. And to the downside, we note, or if you prefer, we maintain our 32,670 support level. At this point, though, we could make some readjustments, and I would prefer to go a little bit lower so we can catch this one as well. And that would bring the support line at 32,500. Here you go. One could also lower the R1 and bring it to this level. Note the touch here. And we had the testing here as well. And a test to the downside here. Seems quite an interesting level. I'm keeping that. And that would be the 33,280. So we changed, recalibrated practically the S1 and the R1. Now, should the pair maintain a sideways motion as expected, I would expect also the R1 and the S1 to be respected. Should the R1 be broken, that would be a signal that the bulls are coming in, and in which case we may see the price action rising, breaking the R1 and start aiming for the 34,275. Mind you that we have a number of mid-levels here, which are quite interesting. And they would be set at around 33,900. On the downside, and should the bears regain control, that would practically shift the downward trend line to the right. Yet for such a scenario, we would require a drop of the price action, a breaking of the 32,500, definitely a lower true than this one, and for it to start actively aiming for the 31,730. Note how the S2 provided support here, and that was around the beginning of November, 2nd to the 3rd of November, and it was able to reverse beautifully the intense downward motion of the index here. And note what had actually followed. It was this beautiful upward trend line. So in our opinion, that remains a pretty valid level. Also note that it provided support here, but it's not that obvious, but there was a push higher. Practically the level used this as a platform to rise even further. So that should sum it up from here. From all of us here at IronFX, best wishes for solid trading.
Hello everyone, my name is Emily. In today's video, we are going to talk about the scalping strategy. Scalping is a forex trading strategy that involves opening and closing multiple positions on one or more forex pairs over the course of a day, usually in seconds or minutes. Instead of opening one position at the start of a trend and closing it at the end, scalpers will open and close several positions over the course of a trend. Scalpers usually hold a position for a very short time, getting in and out of a trade within minutes if not seconds. The aim of scalping is to gain just a few pips at a time, looking for multiple small gains rather than fewer larger ones. Scalpers often use CFDs to trade forex pairs that are rising or falling in value. They will open a position to buy if they think the price will rise and open a position to sell if they think the price will fall. The short intervals between trades and the speed of the scalper working with price differentials enables trades to have less exposure to risk overall. In addition, if the trader is very disciplined about cutting their losses on losing trades, their risk is reduced even further. CFDs, which are leveraged products, also enable traders to open a position with a deposit called a margin. This can magnify profits but can just as easily magnify losses because your profit or loss are calculated from the full value of the position. That is why it's so important to have an appropriate risk management strategy in place no matter which scalping techniques you're using. Basically, in order for a scalper to make a significant amount of profit, a larger position size is usually required to make the trade worthwhile. But scalpers must be very careful to avoid high volatility when trading in the forex market and to have a reliable broker that offers minimal recalls. Thank you so much for watching us today, guys. Stay tuned for more educational videos. Bye-bye.
Right, I bet you guys can see my screen clearly right now. All right, let's start today's advanced stochastics oscillator strategy. Okay, let's take a look. This is my profile. You guys can just be open and also type in the chat box. So we are looking at today's agenda. So we have an introduction of stochastics oscillator. We also have the best settings used for stochastics, and thirdly we have the secret strategies that institutions actually use and look at, and lastly we will be using stochastic oscillators to actually identify divergence. So what exactly is a stochastic oscillator? So some of the background of stochastic oscillator is that it's actually a popular momentum indicator developed in the late 1950s by George Lane. All right, we are also looking at it to be comparing the security's closing price relatively to its price range given or over a period of time. Sounds relatively close to moving average, but slightly different. All right, the oscillator does not follow the price and it does not follow the volume, but rather follows the speed or the momentum of the price. So that's one point that is very, very different from moving average. So we have a graph right here saying, seeing a stochastic indicator. You can see the bottom red color curvy line is actually how it would look like, how the stochastic indicator will look like to in comparison with the chart above, which is your regular trading chart, right? So we are looking at its formula stating that percentage K equals to current close minus lowest low divided by highest high minus lowest low times 100. All right. We are also looking at, so stochastics has two components. You will have percentage K and percentage D, which is shown in the bottom figure. So because the fast percentage K can be choppy, we will be smoothing it by applying X period moving average. All right, therefore finding ourselves with a slow percentage K, and then to get the signal line, we smooth the data further by applying another X period moving average to slow percentage K, and now we have percentage D. So now we will be, in whole stochastics, we will be seeing two visible lines, which are the slow percentage K and the slow percentage D, which we see right here in the figure. So right in the figure, you can see the green wavy lines are your percentage D, K, and our dotted lines are actually our percentage D. So the best settings, or rather the default normal settings for stochastics used are normally 5,3,3. So you'll be seeing that these numbers will appear on the settings of the stochastics indicator when you are using any form of trading chart website, trading chart app. All right, so readings are more than 80 will indicate the price is near its high, and readings that are above 20 readings that are smaller than 20 indicates that the prices are near the lows. So we have an upper bound and a lower bound kind of range thing. So we are looking at percentage 80 and 20. All right, the security that is overbought when percentage K moves above 80, and security is normally oversold when percentage K line moves below 20. I think it'll be more graphical once you get to see it. So we will look at it in a while. So some of the secret strategies that institutions use, or sometimes I do showcase in some of the webinars that we have had, where I use stochastics as the indicator, will actually include the uncertainties of their estimates and analyzing how portfolio performs during a volatile and uncertain market. So we are looking at something that is called the hidden support and the resistance. So backtrack a little bit, we are looking at basically on this slide, we are saying that we are looking at highs that are 80 and lows that are about 20. So we are looking at these two as resistance and support. However, if you are looking at how the price reacts and the momentum it carries in the stochastic indicator, you can see that on these four red color highlighted areas, or rather price and reactions, are the peaks of the reaction, right? So we can see at the peak of the reaction, we are seeing that actually at the peak, we are looking at 93.52, way above than our normal range that we're looking at 80. So in this case, if you are stopping yourself or letting go of your buy in and letting go the price where it hits 80, in the range, that would be ignoring hidden resistance that are actually like 93.52, or it would cut short your own profit that you could have possibly made, right? So in this case, we can see that the 1, 2, 3, 4 touch points on the peaks of the graph. All right, so on the 4 touch points, they are all in line and forming a new hidden resistance of 93.52. So we are also looking at the actual chart of dollar franc in H1 time frame. We can see that it's a very nice upward sloping trend. We can also see that these touch points, I would need my pen. You can see that these touch points could also relate to the chart right now. Right, so we are seeing that these few touch point that bounces off or bounces off the upward trend line are also bouncing off your invisible support, which is at 4.2675, which is way below our 20 mark that we are looking at before. So you can see that. Let me just clear the drawings. Okay, so we can see that in this case, we can mark this 4.2675 as a support in our resistance. And in this case, we can see that over here, we are looking at a potential push up and stochastics, which also means that there is a likelihood of support that has been bounced off on the stochastics indicator. Okay, so this is what we are looking at identifying divergence. Sorry. In this case, oops, sorry. So for those that are familiar with divergence, I think that this slide will be much easier for you guys. But however, those that are not familiar with it, you can look at, first of all, we have a upward looking trend with higher highs, higher lows, and downward moving trend with lower highs and lower lows. So we can also see in this case that stochastic, how can they identify in terms of divergence, right? So in the first few slides, you'll be seeing, we did mention that stochastic is actually looking through pricing momentum, right? So you can see that in this case, it did reach the peak beforehand. However, there was a slight increase in the price point. You can see that price actually closed off higher than before. However, in stochastics, they can capture a lower momentum, which is really odd, right? Since the price actually did close higher than before, which is also an indication of a divergence, which in this case, we call it a bearish divergence. So in this case, after the bearish divergence, price indeed went all the way down to this level. So we can see that this also coincides with our hidden resistance level, which adds on to the divergence theory that we are looking at. And then we do see the support here. This is not in the slide, but you guys can also see it as well. So, and then price did bounce off the stochastic support that we are looking at, and also the pricing support that is also available over here, and did move all the way up. And then we are also capturing another bearish divergence at a higher price. So we can see that repeated pattern on the hidden resistance level of 94.98, and also a bearish divergence at the peak. In this case, you can see that indeed the bearish divergence carried over and price did slow down and dropped from the stochastics hidden resistance level, coinciding with our bearish divergence. All right, so that's pretty much it for stochastics indicators. I know that I did go through a slightly quicker. If you guys have any questions, do let me know what kind of questions you have. You have some time to key in the questions before we go into a live analysis. Okay, I see that there are no questions. Then I will be sharing my screen right now to the chart. Okay, do let me know if you can see my screen. Oops, sorry. Oops, sorry. I'm losing the chat box. Okay, you guys can also key in your Q&A or in the chat box. If the chat box is not working, do use the Q&A, all right? So let's go through some of our regular pairs that we go through in webinars. I mean, we can go through any requested pairs as well. That would be great. So maybe let's just start off with dollar franc. Let's take a look at the weekly chart. Hopefully you'll be able to use stochastics in this case as well. So we are seeing a overlap, support and resistance overlap. We are also seeing a key resistance level over here. We'll take the first closing price as well. So it'll be 1.00153. We're currently looking at a dollar franc weekly chart. All right. So let's look at daily. We can see that for now, we are looking on terms of the daily, we are seeing that price is actually moving in between these two price. So we're looking at 0.93 and 1.001. So this is a not, in terms of the daily chart, is not super trending. We are looking at a sideways moving kind of trend. However, if you take a closer look in the H4, you can see that it's moving down slightly. We are looking at a potential channel, I believe. Let's try out. Yep, we are looking at a downward moving channel. A bearish channel in this case. However, I would say that currently price is right smack kind of in the middle of the channel. A bit unsure. The market is a bit unsure of its goings, and we can see the price do react a fair bit on this level of resistance at this price of 0.94312. All right, this is something that for those that are carrying on with a dollar franc trade is a price point that you guys have to take note. It does seem like the price has difficulty bouncing all the way up to the resistance that we have at this level. However, I think we do have to take a closer look on where it's going. It looks like on the H4, it is still moving a sideways with a underlying bearish momentum. Let's look at another pair. Maybe Aussie dollar. Okay, let's start from the weekly chart. Initially was a downward moving, maybe it's a channel, hold on. Yeah, it was a downward moving channel, but you can see that price has broke out of the channel. For Aussie dollar, let's look at 1-day chart. Very obvious, very nice channel. On the 1-day chart, you can see the very prominent upward rising trend. Not a very nice trend line, so we'll leave it. Try to see whether is there any highs or lows that we can take note of. As of now, not much. Let's look at H4. Okay, so we are seeing a upward moving channel. Okay, so it has just dropped out of the bullish channel that we have just drawn. Has a momentum to go down. However, I would say that there is some area of moving downwards. However, I am seeing a bounce off in this area of support. All right, so I wouldn't say it's a very big movement. I would say do keep in view for this as well. So we can see that some price did have a difficulty pushing higher than 0.68. All right, so weird today. Today's FX pair seems a little bit odd. Let's do silver then. Okay, for silver, very obvious levels here in terms of support. Looks like it's an upward momentum for now. Let's look at daily. So on the daily, there's a upward moving trend line. Not a channel, but upward moving. So we are also looking at a potential support turn resistance price point over here. Looking at H4. Let me just redraw the trend line. Instead of a trend line on H4, it looks like a channel. Yeah. So in my viewpoint, I would choose to remove this. I am seeing another level over here instead. Seeing a upward movement bounce off. And I would like to keep my stop loss slightly closer. Okay, let's use our Fibonacci retracement. So we are looking at a potential bounce off in this area. Let's use our projection. Drawn wrongly. Okay, so 127.2 coincide with our retracement. Let's take a look at our potential take profit. Looking just nice at the candlewick range. Take a look at stochastics. So you can see that in this case, let me show the setting. The blue is percentage K and D is percentage D. And then we are looking at possible support levels. Resistance level. All right, so there's a chance where we can see a bounce up from here. Sorry, the support can be slightly lower. Right, so we are seeing that there's a chance where price will drop slightly a bit more and then we will bounce all the way up to our take profit. However, you can see that I'm paying out the resistance to be 96.21 and support to be 56.1. All right, this is what I am looking at right now. Sorry. Okay, I am looking at this as well, Ichimoku cloud. The way the lagging and span. So you can see that there's a chance where price is actually above the cloud and we are indicating a upward movement momentum. All right, this is our silver for today. Is there any divergence per se? I would say no, there's no divergence, peak and drop. So it's very natural, very coinciding with the price and the movement. All right, this is silver for today. Let's hold on. Okay, I think it's fine now. Let's look at gold. Very obvious support here. Previously was on a downward movement. Possible support and resistance blockage. So it's a support turn resistance moment. Let's look at the daily. Nothing much to be captured here. Let's look at H4. Well, there is something that I'm seeing a slight upward moving momentum for gold in terms of channel. We can see that there is a support turn resistance level here as well. You can see that price did double twin top. Price is already heading for the support, in this case in stochastics. All right, so there's a chance where price would bounce off from this overlap that we are looking at. So in this case, I'm actually personally also thinking that maybe we should go for this. And then this one, in this case, I would and could put according to Fibonacci projection for our stop loss. Our 78.6 Fibonacci projection is also nicely in line with our buy entry. You could keep your stop loss higher if you want to. However, I think it would be just nice as it's slightly below the channel and it will show a lot of indication if it really exceeds that level in price. Price is also holding above our cloud. Okay, this is my take. Let me just add in a retracement. 61.8 as well. This is what I'm looking for gold. All right, as of now, do we have any questions? I guess not. Let's continue moving. Let's do Kiwi dollar. Like a very nice downtrend on a big time. Let's hide Ichimoku for a while. It's a relatively flat downtrend that we are seeing. Some form of resistance over here. Completes a V-shaped recovery. Let's look at H4. Depending on how you want to draw, I would like to draw closer to current prices. This is what we are looking at, the upward trend on H4. We are also seeing a indication of support here. So many touch points for this. I would say this could go both ways in terms of moving towards a resistance on the bigger time frame, like on the weekly, the price actually move past that and move towards the bigger resistance of the downward channel. However, the smaller time frame, we are looking at a short-term upward movement. there is a chance that this is a Nike tick reaction in terms of this that we are seeing. So let's take a look. Similarly, like a negative reaction, however, it has been played out back to here. So we are looking at this retracement with 38. Yeah, about there. Okay, so I would assume that if we ignore this historical resistance, let's just say, in this case on H4, it is here. It goes way back. Okay, then I will be looking at a probable upward movement. Sorry, my screen just went black. Hold on. Okay. We're looking at 100 at the bounce off point. One, 272 to be a stop loss. Let's take a look at Ichimoku cloud. Price holding up nicely above the Ichimoku cloud. Let's look at stochastics. We can see that stochastics indeed has reached the bottom. Looking at a very nice support line, very high chance of it bouncing all the way up. Okay, so we are looking at this bounce up and we are also identifying resistance over here. We can see that actually the real support for this resistance for Kiwi dollar is actually 12.88 instead of our 20. All right, this is what we are seeing for Kiwi dollar. Okay, let's move on to the next pair. Let's do unusual pairs like Aussie Kiwi. Let's do it on the weekly basis with an upcoming support here. Strong decline from the resistance here. Okay, let's look at daily. We can see a very, very strong down. So look at H4. I would say even though it is a downtrend, it is looking at a possibility of short-term recovery, short-term retracement. Let's take out stochastics first because I want to see, is there any chance of divergence? No chance of divergence. We are still looking at a downward sloping even on the stochastics and a lot of close support levels. However, I do see that there's a chance for a small bounce up. However, I don't think it is worth the risk. Okay, anyone doing Kiwi Aussie Kiwi in the chat room? I guess in this case, we do not have any. So maybe let's just skip the pair. There's a franc yen. Interesting. We're looking at resistance and support level. Let's look at daily. You can see that actually price is moving up and down between these two levels. H4. Very obvious. The nearest resistance we are looking at is here. Sorry. 148.757. There's a chance that price is actually making a V-shaped recovery back up. It was before that a downward moving. There's a chance that the price would exhaust in a while. And there could be a way better entry. So let's just take a look. It is indeed true that price has reached its resistance. Is something to be aware of. All right. So there's a chance that the burst of the bounce from the support of 142.986 has been exhausted. So I would say that it would be better if we take a precaution on coming back for the testing and bounce up again. So my opinion is that if there's a chance that it drops back down, we could go in from here and taking profit at here. So we're looking at a 38.2% drop back, looking at a 50% stop loss. All right, so this is what we are looking at. Let's see whether our Ichimoku cloud can give us some more information. Yeah, it did seem like a downward moving for this one. So Ichimoku cloud is slightly lagging as well. So we do have to see whether the price exceeds the cloud of actually come back down under. All right, so this analysis is something to be observed. I would say that we have to wait for the price to react to this current stage first before we could decide on any direction. Okay, let's look at another pair. Dollar CAD it is. No particular channel or anything, but there is a upward moving slope. So daily slope seems to be slowing down a little bit. Previously, it looks like it has had a head and shoulder pattern kind of things. Yep, did react up to it a little bit and then picked up the momentum again. Looking at a potential support over here. Let's look at H4. There's a upward moving channel. There's a chance that it would have dropped down with the exhaustion of the stochastics as well. Yep, very high in resistance level already. I'm looking at a potential downward movement. Would still want to keep my price within, as in my take profit within the channel. So I would put it slightly above and on the dot of the support, the resist of the channel, and my stop loss just right below as the support as well. All right, let's take a look. One, 100% for take profit, and we're looking at 127.2 for stop loss. Let's take a look right now for entry, 100% for entry as well. Very nice triangles. Yep, that's about it for dollar CAD. Do we have any questions? Okay, I guess not. Let's look at yen. Upward moving as well, resistance here as well. Let's look at daily. Let's change this to red. H4. Interesting. I think on H1 you'll see a slight triangle. So on H1, you'll be looking at this instead. Let's just do a small analysis on H1. Interesting. Looks like it's more of a downfall for the short term. And it is stopped a bounce up over here. CAD yen is pretty odd. Let's look at H4 instead. H4, you can clearly see that price has not reached its full potential in terms of resistance. Still trying to climb upwards. I'll say for the short time being, it'll be pretty hard. However, if you're looking at a longer time period, you could see that there is a chance of bouncing up. However, it's not a very big entry. I would say the risk is not very worth it. Yeah. So in order to keep our take profit within the channel, we will be looking at more of the 1:1 in terms of stop loss and take profit, which I am not a very big fan of. Okay, we'll do one last one. All right. Let me think. Let's just do the XY. On the weekly chart. Upward moving as well, strong downturn after. Let's look at daily. So recently we're looking at a down drop. Let's look at H4. Yep, so looking at a downward fall for recent timings. Short-term downward, we can look at long-term upward, but let's do the downward first. I'm going in line with the trend line instead. Let's use our Fibonacci projection. 100% for the drop. Looking at 161.8 for stop loss. %100% for the take profit as well. We are also looking at Ichimoku cloud in terms of price is below the clouds. We can also see that stochastics right now is at the resistance. We are highly likely heading for a drop. Very beautiful resistance for this case. This is what I am looking at for the XY. Seems to be an impeccable drop coming, I believe. Yep, I think that's all for today. Since you guys don't really have any questions, I will be seeing you guys next time. All right, goodbye.
Everyone, today we'll be looking at another trading strategy known as hedging. Hedging is a risk management strategy that is used to offset losses by taking an opposite position. The two positions should both remain open without cancelling each other out, and they can be established just before the release of a key news event. Hedging against risk means using financial instruments or market strategies to offset the risk of any adverse price movements. In other words, investors hedge one investment by making another trade in an opposite direction. The reduction in risk provided by hedging usually means a reduction in potential profits. Basically, hedging is a technique that is meant to reduce a potential loss and not maximize a potential gain. If the trade you are hedging against is profitable, you also usually reduce your potential profit. However, if the trade loses money and your hedge was successful, you will have reduced your loss. Bear in mind though that every hedging strategy has a cost associated with it. So, before you decide to use hedging, you should consider if the potential benefits justify the expense. It's important to remember that the goal of hedging isn't to make money. The purpose of hedging is to protect from losses. The main advantage of hedging is that the neutral position is resistant to sharp market swings that generally take place after a significant market event occurs. Thank you for watching. Hope you found our video interesting. In our next video, we'll be looking at another trading strategy.